Hey guys, Noamada here. Again, you're with us in the Trader channel about how to trade, how to invest in the capital market in the US especially. Today, I'm gonna talk with you about Uber and Lyft. Okay, there are two interesting companies that is about riding and about mobility from place to place. Ubers and other things, but especially riding. That's a special thing that they do. And Lyft also, they're a big competitor. It's a hot topic right now. Everyone talks about just IPOs like Uber in start of month, Lyft a few months ago. Don't lose it because it's very interesting, and I'll teach you how to make money of it and which one to choose. Stay with me. So hi again, you're that's in the traders, and let's start talking about Uber and Lyft, two companies that everyone knows. Lyft is a mobility company, taxi drivers that take you from place to place. I call them taxi driver, even though they're not really taxi drivers, just riding drivers. And we have Uber. By the way, Lyft, this is what they do. They just concentrate in riding from place to place, while Uber expanded what their main goal. First, they not only do riding from place to place by cars, they also do it by scooters and other traffic combinations. And now they have Uber Eats, which is a new one, and it's just about almost 10% of their operations, but I believe it will grow. They have enough data to work with, and they also have this small one, they call it others, but it's gonna be Fate, something like that. We're not gonna talk about it still because it's not really big and not really important for my perspective. So let's talk about which one is preferred and which one we'll choose to buy. But first, if you like our channel, please subscribe here. You can give us like, you can comment, and you can send me an email down here. It'd be great. I read everything I got, and I try to make videos about all the topics that you ask me, what interesting you more, what interests less, and especially how you can make money of your question, how you can make it better for yourself. So let's start with Lyft. Lyft, the first thing that I really like about them, that they don't have debt. Why it's very important? Because these two companies, now they are burning cash. We'll get to that in the next part of the video about their financial statements. But first, you need to remember that they both don't have positive cash flow. It's still sort of a growth company. Why I do it like that? Later I will explain. But first, we talk about a company that have negative cash flow. So now, if they have debt, it's pretty crucial for them because it means that they always need to bring back the money. And because they have a negative cash flow, it means that they pay high interest on their debt. Uber, I believe, is about 8% on $7 billion. It's pretty high to give it back every year. Something to handle while they need to concentrate about growing. So I don't really like it. For Lyft, there's not really debt. Small things to the bank, not something that can affect on their growth or on their plans. So that's a good point for Lyft, bad point for Uber. By the way, just before I forget, both of them had IPOs. Just Uber just a month ago, Lyft I think 2 months ago, something like that. And why you didn't buy in the IPO? Should you buy in the IPO? This for another video that I already uploaded. You can see why I don't believe in buying in the IPO. So if you missed it in the IPO, you didn't lose. You just made a good investment. So market cap 16.5 billion, while Uber it's 67.2. Why it's very important? Because actually these companies have market caps only on the growth, because don't really have manageable assets that give them the money or that give any cash flow. Maybe they have some offices here and there, but they don't really have some real estate that really affects their financial statements. So the market cap is mainly about the operational reports. So Lyft is worked mainly in the US and Canada, not mainly, only in the US and Canada, and Uber is all over the world, mainly, of course, in the US and in North America. Market share 20%, while Uber is 18%. Something very important to say about the market share. Okay, right. Uber is 4 times bigger than Lyft. Only that only 2 years ago it was 10 and 90, which means that Lyft just doubled their market share in 2 years. Okay, while Uber lost more than 10% of their market share in 2 years. Something to consider. By the way, it's still growing. Lyft is market share are always growing, and they only concentrate in the US and Canada, by the way. Of course, that Uber also have other competitors in other countries, like Coming in the Middle East, or Hakim in the Middle East, but it's not something that we're going to talk about. Just want to show you that the market share of Lyft is always growing, while the market share of Uber is getting lower. But you need to remember that Uber is not only concentrating in the riding, it's also about Uber Eats, which we'll get there in the end, and why I really believe in that. Revenue. We can see that Lyft has great increase in the revenue, 3 times from 16 to 17 to $1 billion revenue, and double it in 2018 to $2 billion. While Uber only doubled from 16 to 17, and only 30% to 18, which now it's on $11.5 billion. The thing that I really like in Uber is that they had operational profit of negative of $3 billion, then $4 billion, and then back to $3 billion. By the way, if you see the financial report, there is a reason. It's not because they got better operational performance. Sorry, they have better operational performance, but not only that. They also do something with the debt. They change it, and they got the lower interest, and this is why they had to give back the less money. It's very important to check this kind of thing. While the operational profit of Lyft, while their revenue is growing, the operational is just getting higher. So it takes us to a place, because these two companies are losing money, we can't check it by their profits because they're both not profitable. So we're going to check it by the price to sales, all right? To see what is the market cap. Okay, this is why I really like to use the market cap to the sales, which let's talk about the sales as the potential of these two companies. So if we have 16.5 for 2, it means that we have price to sale of 8, and here we have about 6. Very important, by the way, as long as this number, as small as it is, it's better. Sort of better, because it means that the stock is not too expensive. Okay, so we see that price to sales only 6 times. By the way, Uber at start, all the investment bankers, and I know how investment bankers do because I'm also an investment banker. All the investment bankers try to issue it in $105 billion. Okay, and they didn't succeed. All the investment managers in the US tried to figure out what is the price, and they agreed to pay. If I'm not mistaken, it was also the price in the start. It's just dropped down a little bit, not too much. Maybe it was 70, something like that, 75. But it wasn't the 100 that they tried to issue it, and it means that. And why they try to issue it in $100 million? Because they say, oh, if the market share is 4 times than Lyft, it should be 4 times than Lyft. And then in that time, Lyft was about, if I remember, it was $25 billion, and then it was 4 times. So I tried to do it as a $100 billion. So this is why they try to do it in this kind of market share and this kind of market cap. But in the end, they
they issued it in about $75 billion, and now it's on 67, which gives us PTS of 6 instead of PTS 8, and now I'll talk about why I prefer Uber. By the way, from my perspective, I don't really like to touch these kind of stocks because they have too much hype next to them, and everyone talks about it, and it looks like it's special companies, even though it's not. If you want really a spoken company, you can buy Facebook, which is already profitable, Amazon that got profitable in the last few months. By the way, Uber everyone think it's a growth company, but I don't know, they started this company 9 years ago, so you can't say that it's a growth company while it was started like 9 years ago. It's not right to consider it like that. So because Uber has more data because of their market share, and because they have other operations like Uber Eats, I would prefer to hold Uber for the future. Even though I would wait a bit to see how it goes, see if something up. Because remember that the owner just said 2 weeks ago or 3 weeks ago that Uber might not be profitable ever. All right, which is a very poor statement for a new stock, especially because we want to buy a company that will never give him profit and you'll never see some dividends from the company. So it's also something to consider. So to summarize, if we look at Lyft or Uber, the one I would choose is Uber because they have, let's call it, better business model while they go all over the world, and they have also Uber Eats, and they have bigger data, and the PTS is lower. All of that would mean that I would prefer Uber. First, that's the first thing I want to say. Second, I'm not recommending on Uber. I would prefer to look for other stocks, but if you really feel like this industry is going to be the next thing, Uber is better. So if you like it, if you think like me, please comment below the video. If you think maybe Lyft is better, also let me know that. Don't forget to subscribe to our channel, The Traders, me and all. We are the traders. We are here to teach you how to trade and to invest in the stock market. So please, if you like this video, please give us a like. If you didn't like, please dislike. And if you can, subscribe, and don't forget to comment about which one you choose. Thank you.